Hey there, very good evening to you traders. This is Mark, and we have Fed coming up in a few minutes. Obviously, depending on when you watch this, may have been and gone. So, it's all a little bit quiet out there. DAX was pretty active today. If you look at it on a daily chart, let's go to a 1 day. Dipped under that, put a big wick in, showing the bulls are still in control. But look how technical it's been. It's really been a market that's stuck to its levels. Let's remove the levels out here and let's just go through the process of marking these out. You've obviously got a support level here which have had drawn in for a while. It's one we talked about before. We've got some up there, but we're not worried about those at the moment because price action is all about down here for now. But we pushed through early on. When he pushed through early on, you've got to pay attention to that sort of thing. And it's the same type of trade as the yen yesterday, although I was much less active in the DAX today than I was the yen yesterday. But it's that drive through and that consolidation below, as you see here. So not so clear on a 15, and we'll zoom in a second, and then you get the break to the downside. It's the acceptance of the break that matters the most. Look at the difference between, let's say, this one where you spike up, you spike down, and then you come back into the range pretty quickly, as opposed to something that is clearing through, congesting, and then breaking back in the direction of the breakthrough. So this would be if you mirrored that would be flagging here, and then you get a further break there. That would be what you'd be looking for technically. That, not a pull back to the level, and certainly not a push back under later in the day. But so what happens? We rolled under, and there's a few things to look at here. If you look at a 5-minute chart, if you look at a 5-minute chart, right, this is where things start to get interesting, because it's the same pattern time and time again across whatever market you're trading. This is where the break has to be sold in my eyes. You've got a big resistance level appears there, and in fact that break is clear, and look, that's the point that you get short. That's the place where you put your stop. And you know what? You don't know if it's going to work or not. You've not got a clue. I didn't know when it was going to work or not when I take the trade, but the risk is so quantified and so acceptable to me that it just why would I not want to take it? The setup, the strategy's there already. I know they're good strategies. I know that they work well. I don't know if they're going to work all the time, but when I can quantify my risk with that tight little stop there and work shorts to the downside. Yeah, I didn't get the whole move, of course, but I was scalping to the downside as we're pushing through it, specifically as we're pushing through that low. Let's go to a 1 minute actually, and you can zoom in a little bit, be a bit more clearer about it. But specifically as we push through the last low of the flag, let's go back to where we are. That's when things got interesting to me. So here we are, a bit clearer now on a 1 minute scalping time frame. Your resistance has been put in. You've pushed through the low. Your resistance has been put in. You're banging your head against it. You've noticed the fact that it's flagging. You've got your line here. You're waiting for the break of it, and all of a sudden we get the break of it. That's fantastic. So now working shorts. And the more important level for me is when we get that little volatility expansion is under the last little low, because everyone's got their stop under there. Every day trader under the sun who's gone long looking for a pushback to the high has got their stop under that low, which is 76, 75 or something like that. And that's when you get that little flush. And we pull back up to it and rolled over again. And this is just the sort of technical things. And look how key that level then becomes further down the line. You've got a 1-2 tags of it, and then we go lower again. Oh, by the way, I wasn't involved in any of this. I'd left it by then. I'd made a couple of good trades on it, and then just thought, I'm going to leave it. I'm not sure what's going on here. But you can see how it's so important to know your levels. And the trouble you've got is when you zoomed in on this level here, and you haven't got a higher time frame chart and looking at what's been going on, you can't accept and appreciate how key that level has been all throughout the day. So it's important to look at the higher time frames, but one of the takeaways I think from this video is just that strategy. It just works well. It works on a lot of time frames as well, and it's such a good thing. Just to summarize, it's the break of the support, or the other way around, the resistance, the acceptance of the level at lows, and then just quantifying the risk by trying to get in on a little break. And especially for me at the moment, trading so lightly, I recognise it's summer. The opportunities are okay. Yesterday was great. Today's okay. They've been sparse compared to every single day, but I'm still scanning for them. I'm still putting out my resistance levels, my key levels, setting my alerts, making sure I know which market I want to watch. and keeping an eye out for stuff that's moving and the opportunities, as a few opportunities still around. So got Fed coming up in about 15 minutes as I do this video. Everything will change. Let's have a quick look at the Dow. We've got a few seconds to have a look. We're all over the place on the Dow, aren't we? Who knows what's going to happen with Fed? I'm getting a bit fed up, no pun intended, with the whole thing, but we'll see. If it creates an opportunity later in the day, fantastic. If it doesn't, then maybe tomorrow there'll be some sort of setup based on a break of the high or low from the prior few days. So anyway, take care guys, speak to you soon.